Ladies and gentlemen, welcome to Only Trade to Win. I do not know where the market is going tomorrow or the next week, and I do not have any buy or sell recommendations for you. But what I do have is a methodology that took 25 years together. And the intent of this show is to show you how a professional trader and investor thinks so you can implement these strategies and become a more profitable investor on your own. Today is February 6, 2024, 2 a.m. New York time. We have a very exciting show because a lot of our stocks are moving really fast. Here's a quick look at Nvidia. After consolidating for 136 days, as we noticed in our prior show, starting in August until it recently broke out on January the 8th, the stock traded 4 months, touching this $500 area once, twice, coming close 3, and the 4th time took off and ran up more than 30% in just 28 days. And looking at a daily picture for Meta does not even do justice. And in order to appreciate it, we have to zoom out and look at our weekly picture. And here is the weekly picture for a comeback champion of 2023 and now a contender to become a champion overall in 2024 Meta. Again, what we repeated many times, we do it again today. Number one was November of 2022. The stock made its all-time high around $385. From there on, it sold off for a year to number 2, coming close to $80 a share. And starting January 3rd, the first trading day of 2023, the stock turned around and now it is up more than 400% in just 448 days. And Meta has become a recent favorite example. Anything is possible in the market. A stock that loses 3/4 of its value 1 year now is up more than 400% in the next year and 2 months. Now we're going to jump to our watch lists, and here you'll see it better because we'll be looking at numbers, not at the pictures. So we took this measurement on January the 19th, and by then we noticed that Nvidia was up 18%, Meta 8, Apple 3, Microsoft 7. And then when we did the end of the month, here again, Nvidia first once more, Meta second place with 7%, and Microsoft also up 7%. Now this is January 31st. Check this out. Here we are 3 days later. Nvidia up 37 was 28. Meta up 28 was 7. So plus 21% here. Microsoft plus 4. Amazon plus 11. That's in 3 trading days. So we're definitely in the fast moving markets. And what we're going to do today is update our indexes, because last 5 shows we spent talking about the semiconductor index and actually looking at particular stocks. And what we found was that the bulk of increase in earnings per share and revenues definitely falls on Nvidia. Now this 440% increase for Intel, it is not accurate because last year they missed numbers by huge amounts. So having an increase like this over 1 quarter is not an indicative, and you can find that information by closely looking at each quarter and comparing quarters like we did for Intel here. Here is the big miss last year, and here is this year, which actually they had a pretty good quarter in terms of beating the estimates. But again, we really would like to have our own methodology and not follow any estimates, so we can do work on our own. And understanding where to find information like earnings per share and how to compare it to the prior quarter, it's a basic skill that anyone must master. So I hope this helps you. If it does, please comment below and ask questions, because this is the only way I can know what you're looking for. So after putting all the numbers down and seeing that the situation is not actually that great for majority of stocks on the Philadelphia Semiconductor Index, we spent last show looking at our stocks and seeing what's going on with their earnings per share and revenues, column number 6 and 7. And in the last show we found out that unlike the semiconductor stocks whose earnings per share and revenues are dropping compared to last year, the situation with the stocks that we're following is a lot better. And the price appreciation that the stocks experienced last year, column number 2, is actually backed by some fundamentals. So what we're going to do is we're going to update our indexes, and I'm updating them till February 5th. So these percentages are year to date, and they will include January plus the last 3 phenomenal days that we had after a week of great earnings. So here's how we left off our indexes at the beginning of January. Actually, these numbers are the performance for 2023. Nasdaq up 53, S&P 18, Russell 14, and Dow almost 14. Then we were doing shows on the Philadelphia Semiconductor Index. We looked at the SOX index and it was up 70%, way outperforming all our 4 indexes up here. And here's how we stand at the closing of February 5th, 2024. And again, the leaders here are the Nasdaq and the S&P. And if we go back to 2023, we can say that the strength from last year continues. This rally in Russell, it was a sick man all year, then it just ran up in the last few weeks and immediately sold off. So, it's just the nature of this index. It's super volatile. But it did perform well and it did take the 3rd place by the end of last year. Now, this year we see that Nasdaq and the S&P are carrying their strength, sitting at all-time highs. And Russell, I mark him red again because goes negative for the year, 23% from all-time highs. Russell is a sick man. This is the lagger for all the indices. And the Dow is up a little bit, but it's hitting its all-time highs. Now, since we did a show on all the international indexes, this is from the show Where in the World to Invest. We basically looked at different world indices, and here was the performance for 2023. And here was my verdict. Even though KOSPI was a great performance, we placed it on the not now list because of the tensions with North Korea. Out of all the indices, Nikkei was the best for the year. However, it's a definite no because it's been 35 years and it's still trying to reach its all-time high set back in the 90s. And obviously, the Chinese indexes were a big no-no because we will look at them again, but they're way off their all-time highs. And specifically, Hang Seng is 113% below its all-time high. So again, it needs to more than double. The all-time high was set at 33,000. Here is a picture of Hang Seng. It's made its all-time high back in 2017, and at the level it's trading right now, it needs to more than double to reach its level. Now, here is the big issue. If we look back to where we're going left, this is right here, ladies and gentlemen. This is June of 1997. The Hang Seng index is trading where it was almost 30 years ago. So China is in big trouble. Being a superpower of the world, it's 21st century slavery capital of the world. And if you can see at the indicator of free world, the financial markets, we can see that money is going out of China because they're not taking care of their people and they're using them as resources. And when you don't develop your biggest potential, the human capital, this is what happens. China made huge progress, but then it's going back down to where it came from. And that is a society where a few people rule and think they can have it all while others are living in misery. In any case, there is absolutely no reason to invest in China. It has not been performing, it will not perform, and if it will perform, all of its performances will be like this, just temporary, and it will always come back to where it came from because nothing fundamentally changes with the people and with the government. But since the show is about investing in the United States, everything is great. No matter how bad the news gets, the markets are making all-time high. Our favorite companies are earning more money than ever, and American companies are illustrating that anything is possible. Now, ladies and gentlemen, everything that we've talked about here today is basic and fundamental. We need to know where we stand on the big picture, not just with our indexes in the United States. We need to know what's going on around the world, and we need to know how investments are performing. Someone shows you a presentation and says, hey, look, Nikkei was up 29%. This is the best market in the world. It will never be as hot as it is. You can look and say, yeah, it's great, but it took only 35 years for Nikkei to get back to this level, and it's not even at its all-time highs. Or if somebody tells you, look, you gotta invest in the Philadelphia Semiconductor Exchange, and you really don't need to worry about picking which stock is going to be a winner, when in reality, you know that you do need to know and look and how to look for possible future winners. And you also know that not all stocks inside of the SOX are created equal. And as a matter of fact, as we found out, exactly half, right here, this is number 15 out of 30, exactly half of the stocks on the Philadelphia Semiconductor Index have experienced drop in their earnings per share and revenues. And that is a big deal because no matter how you look at this situation, it is the earnings of the company and the expectations of future earnings that drive this exponential stock price. Now, one last parting thought. A year ago, Meta was a $90 stock, and a year ago, Nvidia was a $150 stock. Navigate with care, and I will see you next time.